All right, that's all sweet stuff. What is up, everybody? Welcome to the Russell Journal. I am Russell, and of course, this is my journal. Glad you could all make it. Glad to come check it out. Do me a favor, try and hit that like button, subscribe, do all the good stuff in the bottom. I am trying for two things really here. One is to become a professional day trader, and the second is to become, seen as somebody as a viable stock analyst. So it's kind of the dream. I really love the stock market. I want to make this my future. And so part of the reason I'm doing these videos, give me 1 second. I didn't mean to do that. Anyway, part of the reason I've been trying to learn to do these videos and get better at stock market and do stuff like this is because that is my hope. I really love the stock market. I love economics and these things around here. So I'd really like to make this like a viable thing. That all being said, moving into today, talk about what's happening. Okay. Again, some of the stuff that we talked about yesterday, we looked at the currencies and we said, hey, there's a chance these are really in trouble and that the Bank of England is going to try and, not just the Bank of England, but the Bank of Europe and the Bank of Japan are going to try and step in and save their currencies at some level. Okay. Today we got that from the Bank of England, where they came in and they decided they were going to start some form of QE where the bank was going to begin buying bonds. All right. And this really led to a lift in the stock market. The second thing that happened, and I'm going to tie all this together here in a second. The second thing that happened is we had one of the Fed speakers, I can't remember which one off the top of my head. He came in and said that really what they're gunning for is another 75 basis point hike and one more 50 basis point hike after that to do another 125 basis points by the end of the year. Okay. Now, again, if you were watching the market and when they announced the 75 basis point sell-off, it tanked. And then when they announced that they were raising the neutral rate for the Fed funds rate up to around 4% or 4.5% or so, then if you were watching for that and that was kind of what you were looking for and you saw the market sell off, you're probably going, well, what the heck? The market has got to be schizophrenic. The guy just told you we're doing this much and this much. And you're not selling off. Now, I didn't actually expect it to sell off on that sort of statement or that sort of news. Okay. As of right now, the market knows that these interest rate hikes were going to happen. Okay. They're very well aware that these interest rate hikes are going to happen. They just didn't know how much to expect. Are they going to do 75 and 75? Is there 100 basis point hike looking to happen or looking to come, or what is looking to actually take place as far as all this goes? Give me 1 second. I need to see, make sure my producer's not trying to. Give me 1 second. Okay, I'm definitely going to have to edit this live stream for a better video for tonight. So that. Okay. All right. So getting really into it. Again, the market already knew that the rate hikes were coming. Okay. They just didn't know how much, and they didn't know how much to price in. What the market hates is uncertainty. What causes a lot of the selling is just, we don't know. Okay. So with the market not knowing what was going to happen, they sold off. They just get out of the way, risk off, everything of that nature. Okay. At the same time, there's a lot of other uncertainty in the market. Okay. So today they got some certainty. And of course, off of the back of that certainty, we got a bounce. In the interim with that, though, the second thing that hit us that we didn't know about was that the Bank of England was going to come in and do a begin doing their quantitative easing again. Okay. They're going to try and, through buying bonds, I think, save the British pound. Okay. That's really what they're going to try and do. This makes for a nice rally in the market. Okay. Short term for us, this was a good point to cover shorts, get out of shorts, get a rally going up in the upward direction. And really what you need to look at is two sort of things. Is either A, this is going to be let this move up happen and try and find a good spot to get short from. Or if you're a counter trend trader, you live for days like today where like it just out of nowhere just takes off in the other direction. You catch momentum and you ride. Okay. I personally, as far as my trading goes, I placed a put trade towards the end of the day. It was a very risky trade. I lost. Okay. As far as that goes, my takeaways at the time, I took the trade because I was really wanting to test and see where technicals really came into play versus kind of this principle idea. So I willingly placed a losing trade. But to be honest with you, there was a bit of me that was really hopeful for this trade. It was really a long shot in the other direction. It didn't seem that bad at the time. And now that I kind of look back at it in hindsight, I go, God, I wish I didn't do that. So again, SPY breaks above its 370 mark. Now, what we can look forward to tomorrow is, as far as technicals go, closing in and above the 370 mark really sets us up for a gap up. And I will go in and we'll talk about this in the technicals when we get to the SPY chart. We're going to talk about the island bottom scenario as to what's happening and creating what's called a tradable bottom. Okay. If you are somebody who is thinking that's it, bear market over, it's sold off, trust me, if you think you're investing here, if you just can't wait to buy stocks and you're buying here and you're thinking it's good, you really should be waiting. It's far from good. It's far from over. And we'll get more into that as I kind of bring out the charts. All right. So I'm going to go ahead and step over into the charts. We will go ahead and take a look at things and see what it do. Okay. So go ahead and pull up my chart. All right. I'm going to see if I can do this. So this is good. So I can see, wow, I'm getting better. I'm getting better. As you can see, I managed to fix said green screen. I had to bring in an extra light. So far, looking pretty good. Feels a lot better. Had to bring in a bigger light. I had like a desk lamp I was trying to shine on it. Did not work. Not a good solution to that problem. Okay. So we're in the VIX, okay? And what did we talk about yesterday? Obviously, we up here. Okay, so first of all, identify the trend. Trend is up, okay? Identify momentum. Momentum is up. Identify the bias. Bias is above the 18-day moving average. It is up. Everything is up, right? Today, though, you have yourself a nice little red day, okay? Nice little red candle. And what did we talk about yesterday? We talked about, hey, this is over the upper Bollinger Band, and they don't tend to stay up here. Regardless of what you want to believe or think, the prices tend not to stay up this upper Bollinger Band. Now, something I learned from my teacher last night is they can stay up there for usually at most 4 days. You rarely get a fifth, and in a very slight chance you get a sixth. But eventually they cram it back inside the Bollinger Bands. So I did not know that, but I learned it. If you are interested in learning this sort of method of technical analysis, again, I'm not an affiliate of Ira Epstein, but I highly recommend that you check out Ira Epstein's YouTube page. His technical analysis, very perfect. And I recommend you learn the Bollinger Bands. He has a Bollinger Band class. I took it. I cannot recommend it enough. It hasn't fixed a whole lot of my trading, but it has fixed a lot of my psychology as far as how I understand things. Okay, so let's go back to it. Identify the trend. Trend is up. Identify the we're going to identify the bias. Bias is above the 18-day moving average, so our bias is long. Identify momentum. Momentum is still up, right? And it is not really embedded, but it is kind of acting as though it is embedded up here. So it's going to be iffy. I think there's some guys who are doing some wonky stuff with this. And I think that basically you're going to look for guys who are going to be buying the breaks on this. They're going to be right. At the same time, it's really hard to deal with. It's hard to say 100% for sure that the slow stochastic is really giving you that. It may be a no-go for some of these guys. Okay. This might be just like a really out of nowhere thing for them. Overall, I think that this is over the course of the next next 6 months or so, it is going to remain elevated. I think it's going to be up there. And I do kind of believe that the idea of a stock market crash is coming pretty quick. Okay. So I think that's going to be coming at us a lot sooner rather than later. And so really looking for this to break above 35 and into the 40s. That's not a recommendation to go out and buy the VIX right here. That would be very, very stupid. You want to trade. If you are trading the VIX, you don't actually need me to tell you anything because you obviously know enough about trading to know how to trade the VIX that you can. Okay. Now let's see. Okay. So we have all of this, right? The VIX pulling back quite a bit in the short covering rally, and we will tie it all together here shortly. Going into DXY. Again, this is where, like we talked about yesterday, we said, hey, the dollar is hot, probably needs to cool off at some point, needs to come back down. You can see again from here, we did make it back under the Bollinger Band, coming down, right? Some cooling off. Here's the deal, though, okay? This has got a physical dollar shortage, okay? And there are people who are scrambling to get physical dollars. So do not expect this to stay down, right? Now, the reason it's down is because the pound is probably up. I would bring up FXE, but I'm not going to. Not today. If we really wind up in a place where we're battling between the dollar and the pound, sure, we'll do something. But there is a battle for this, and life is not great for Europe just because they're buying some bonds. All right. And with that being said, though, again, pullback in the dollar, rise in stocks, we will see all of that. Okay. Again, going through the practice, trend to the upside, bias above the 18-day average. It is long, right? Here's your pullback. If you really want to trade the dollar, this is probably a good spot they're going to be buying it, right? I can't tell you where and how to do it, but I can tell you is they're probably going to be buying it. Slow stochastic. Okay, so trend is up, bias is up, momentum up, right? And where are we now? We're back inside the Bollinger Bands. Okay, you want a shot at this? This is your chance, right? That's what they'll be thinking. And so they'll be coming in to try and snap this up and push it higher from here. Possible price target. I'm going to have to go back over here. Yeah, that 114.44 is probably the big as a price target, but I don't have any doubt. I've got this thing up here. Where are we? 119.26. Okay. This is the next really breakout high of this. And I could pull back the chart from a couple years ago and see when we got here. This is a breakout high. Okay. In the event that we get some type of stock market crash coming, this is probably going to become in play. Above this, you're looking at like 164. And above that, you're getting into this blue sky territory. The dollar could be worth $2, two of itself, coming soon along. And I'll tell you, I think I don't follow Cathie Wood very much, but what I would think, I think this is what her. I'm going to guess this has something to do with her thesis behind this thing, behind the deflationary recession. If that is, she has been touting a deflationary recession from what I know. Like, I started following her about a year and a half ago. I think I just said I don't follow Cathie Wood, and I don't, but I did. And I basically started her whole thought on like this whole deflationary recession. This might be it, right? I know some of the other guys, Steve Van Meter and them, have some other sort of thoughts as to what the recession is going to be or lead the recession, financial crisis. Theirs is kind of a mix of everything. But I think because this is up so much, I think that's what she's thinking, is that there might be something in that. Okay. So, like I said, this is now kind of reaching a tradable position. So I don't know that tomorrow, probably, I don't know if we'll see it rally, how much we'll see it rally, but it definitely seems tradable from the long side. And there's a feasible entry there. Okay, going into SPY. Okay, we're gonna pull some stuff off of here. Okay. All right. We're going to talk about SPY. We're going to go through the usual practice. Again, we're going to identify the trend. Trend is down, pattern of lower highs and lower lows. We are looking at a pattern of, we're looking at the bias. Bias is under the 18-day moving average. So, right. And then where we are right here is we have moved to the right, basically, of the Bollinger Band. And now you are looking at some big guys are probably going to be really eyeing where to short this at. Okay. Now, this is the technical side. The other thing that you have in your favor right now is momentum is still embedded on the slow stochastic. Okay. You've got bears. They are going to be trying to short this market back down. Okay. This is where we're really looking and thinking about the technical side of things versus the fundamental side of things. Okay. What you have going to happen, the Bank of England is doing their pivot. They are pivoting out of their quantitative tightening into QE in order to save the financial market. Okay. Or at least alleviate any sort of pain. The question is the Fed going to follow suit? They have been adamant that they're not going to follow suit. However, on the bull side of this, you have two very key things. Okay. One, you have other banks starting to pivot, and if they're not pivoting, okay, right, you have other banks starting to pivot back into QE. Okay. And you now know pretty well what the rate hikes are going to be. It's not going to be random all over we don't know what's going to happen. Okay. They do know it's going to happen. So you're going to have two things that you have set. One, rate hikes are officially priced in. That is what they're going to tell you. Okay. And the second one is that the potential for a Fed pivot is a big deal, is a possibility. Now, this to them is going to be bullish. They assume that nothing's going to break as a result of any of this. And this is where we really go back to something we talked about 2 days ago when we talk about the idea of a PE ratio compression versus an actual earnings compression. Okay. And this is what we're going to be looking to see if it happens. Okay. In the next 2 weeks, earnings season for Q3 of 2022 is going to kick off. Okay. What we are looking at with earnings season of Q3 is we want to see the guidance on those earnings. The guidance on those earnings is going to mean these guys are going to start looking at making less and less money next year. As they start to project less and less money, we expect to see a rise in unemployment. Okay. Now, that's all that's what we're looking at. Okay. What we don't know is if the Fed pivots, right? It goes back into QE into that. Maybe if money is easy, some of those guys don't lay off as many employees, right? But what will probably more than likely happen, we will rally next 2 weeks, or it'll be a real nasty sort of push-pull sort of scenario. If we go back over here to where the previous June lows were, you've got this whole thing going on, right? And that came into Q1, right? This is the Q2 through the Q2 earnings. It is possible we get a pretty gnarly rally all the way back up to at least to the upper Bollinger Band. To be honest with you, if I was shopping for lotto tickets, if I was thinking, I wanted it, I'm not necessarily afraid to target that upper Bollinger Band. I would much rather target the 18-day moving average with some calls in the event that the bulls really go bananas like they did back in the summer. And I'll tell you, to be honest with you, This rally right here really pissed me off. This thing was stupid and short-sighted, and they never should have done this. And shame on the freaking bulls. They knew the Fed wasn't done doing all of this stuff. And to be honest with you, like this I'm going to rant for just a minute here, okay? Back here, they said the Fed doesn't tighten into a recession. And they loaded up and they started running with it. They knew full well that the Fed was going to say they were going to tighten. And we knew back here, the next interest rate, we knew when this CPI report came out back here, we knew that they were going to raise by 75 basis points. We knew that. So don't give me this whole thing, this whole sell-off is garbage, right? This whole sell-off is garbage because they already knew. And if they'd have been a little more modest with their push back up here, this rally that we could catch here could have been a real monster, all-time high real monster. But they ran in, okay? And I want you to understand, this narrative that they're pushing here is meant to sell stocks to investors, okay? Stocks are a financial product. There are a lot of things, but one of the things they are is a financial product. They pushed this up for no reason other than they could, okay? And they did it in a bold-faced lie. They knew the Fed was going to raise rates. They knew that was coming. They knew that they also knew that there's never been a time that the Fed fund rate has been below inflation. There's been below inflation. There's never been a time that's been below inflation that inflation has gone back down. So they knew that the Fed was going to have to target 4.5%. And then they sold this. So they sold calls all the way up here. And then they tanked it. And all the way down, they sold puts. And now they're going to bounce it back up. So they are legitimately just screwing with people. Okay. And they're doing it all on the back of a bold-faced lie. This is something that irritates the living daylights out of me. Look, you want to trade fair. I get it. You know what? I think it's going up, go up. Momentum's going this way. We trade with momentum. We do this, we do that. All of that stuff, I'm a big fan of, right? But this lie through all of here and this lie through all of here that we don't know what the Fed is going to do. And you could say they don't. I mean, I'm pretty sure the guys over at Tasty Trade would, we don't know. Right. And the thing is those guys probably do know. What they don't know is what the market's going to do, or they can't affirm exactly what the market's going to do. But now we've seen this game up, right? Until this one here is going to be shorter. Now it has to be shorter. You know why? Because they did this. They freaked everybody out. Now they're going to bounce back. And then that earnings compression is going to hit and you're going to catch the next leg lower. That's what's going to happen. You're going to get into earnings season, and this thing is about to take it. It will be a bludgeoning, right? Because now we already have lower PE multiples, right? So if earnings go down and they go down below, just based on the multiple, everything has to go down with it, right? The multiple has to stay here, right? And so it has to go down with it. So what we will eventually get rolling into earnings season is the PE compression, or is the actual earnings compression. And this stock market crash that everybody's talking about, the 50, I don't know how many it's going to be, right? I know the stock market do stock market, and I know traders do trading. And the thing is most of them have no interest in a crashing market. Yeah, you can, if they crash the market, you can short that down and make a lot of money. And that's really, really good for guys like Michael Burry. But on a day-to-day basis, that kills this, right? The opportunity, once it crashes, the opportunity on the downside for a while, as the market sits there scratching its head, trying to figure out how to price itself, is a wreck. So even if you're short biased, even if you like trading the short side, having it crash really, really sucks, right? So they're not really interested in crashing the market. The other thing, and we're going to talk about this one really too, because I'm going to make some extra time. you understand, okay? When you take Ira's Bollinger Band class, one of the things he's going to talk about, and he talks about on a show about what these Bollinger Bands are, okay? And I'm not going to talk about what they are so much, other than tell you this is the algorithm that market makers typically use to keep the market from crashing or from like really going out of control ballistic. And the days you get reports of things going ballistic are because something is breaking. Okay, not because this is normal, how it should be. It's crazy. Anything can happen all the time, right? It really can't, and it's not supposed to. The reason that is the market maker is markets have three real sides, right? There's multiple players in a market, but there's really three sides to a market. There's the bear side, there's the bull side, and then there's the guy in the middle who's basically balancing the two. And that is your market maker, okay? Your market maker is equipped with a couple of tools to do this. He's got a big pile of money over here. He's got a big pile of shares over here, okay? When there's no place to take the market up to, there's no buyers up above, the market maker moves the market down to find buyers. That way they manage this pile of shares over here, right? They don't have too many shares. The other side, it gets too low, they wind up having to buy up shares because they've got too much money. So they're balancing, their job is to balance the market. That's the core of any market, your ability to balance that market if you're a market maker, okay? The thing is, with all of that, that means the market has to have some sort of fair sense of balance as to how things work. Okay. This is why when we get under a Bollinger Band, we don't go short, because we know the market maker wants to make this market appear as though there is plenty of opportunity for whoever wants to buy and or sell. Okay. So the thing is they try like hell to keep it inside of these bands 95% of the time. Okay. And this is kind of their guide. This is what they use. Maybe they've changed, but for the most part, this is what they're doing. So the thing that we can see then is we can know is don't go short under a lower Bollinger Band. Other things, don't go long over the top Bollinger Band, right? So, and then we can even do stuff like see above the 18-day moving average. This is our long bias. And look, I can show you from here to here. Wow, that is crazy, Russell, that would work, right? Same thing with the short bias on the 18-day moving average. Get below it, we go short. Oh, look at all that opportunity to go short from here all the way down to here. Oh my God, right? And then what happens? That one happens. Well, it came off the lower Bollinger Band and went up. Sure. But how would you know to get out there if you're holding for that, right? Went long under here. Look at all the places you could have gone long at and it would have screwed you. And this one time, you might have made some money, right? But through all this shit, no, never mind, right? So all of that stuff kind of being said, we're going to put a big picture together as far as how to basically trade this. All right. Where's the little thing? All right, there we go. We're back. I'm back, baby. Okay, so game plan really going into tomorrow. Well, one of the things you're probably going to get is a gap up tomorrow. And now we get a chance to fade the gap. I don't know. I really don't. As to what will happen with that or not, what direction to go. I am going to suspect more than likely that you will probably have a good chance to fade the gap. Oh, yeah, let's go back and do that. We're going to talk about this. I'm going to take these off for you. We're going to talk about one other thing. We're going to zoom way the fuck in here. And I'm going to give me a little box. All right. See where I drew this little box at? We got ourselves a gap on ye old chart. Okay. Now I'm going to move it a little bit. All right. If they gap this up tomorrow, this will be called an island reversal. Woo! Okay. Because there's this gap that goes right through here, and that is now an island. It's all by itself, all alone on the chart. Now, principles of trading. Gaps get filled, right? So we know that this is going to go up. We know that this is some type of reversal area. And we know that the bulls will probably try and defend that gap a little bit. More than likely, what you'll get is you'll get a move up tomorrow, and they will try and short it down, right? And you may not get it tomorrow. You may not get it for a few days. I personally, unless look, I'm not going to be trading any of this unless this thing comes out of here. If this comes out of oversold, I will start to look and shop for long positions, but not until this bad baby starts moving back in the other direction. Okay. But be aware that if this gaps up tomorrow, especially with that other gap right there, that creates an island reversal. And chances are they're going to try and push it really hard with that. Okay. So just let that be a word of the wise to you. Okay. Going into tomorrow, again, I'm kind of I'm setting up. I've got my $1,000 rolling into the account as far as like filing and looking at trade plans and stuff like that goes, and sort of changing my behavior within the market. I'm really going to be a lot more patient. I've taken some wild swings this week, and none of that has worked for me. So I'm doing kind of the wrong thing at the wrong time. Still, I'm trying to fix that. So in the meantime, I just see what my girlfriend said. In the meantime, it is probably time for me to wrap it up. Thank you for joining me today. As far as the market goes, hope you're having better luck than I am, and have yourself a good night. Pretend I said some sort of catchphrase. Oh, I can't.